Get ready for the action, because we are kicking things off with a look at Nvidia. The world's leading producer of discrete GPUs is facing a massive earnings report on May 20, and investors are desperate to know if this bellwether of the AI market is the right time to buy. We break down everything you need to know about this pivotal moment for Nvidia stock right now. Technology and the performance of Kava Group, while also noting strong results from Keysight Technologies. We also examine the significant earnings expectations for Nvidia ahead of its upcoming report and the growing regulatory focus on tokenized stocks. And finally, we look at the political side of things. We investigate the massive stock trading activity reported by Donald Trump, including significant trades in Nvidia and defense suppliers, and the ethics concerns surrounding his portfolio. Don't miss this deep dive into the intersection of tech, finance, and politics. Stay with us for the rest of the broadcast. Nvidia investors face a critical decision ahead of the upcoming first quarter fiscal 2027 earnings report, scheduled for May 20 after market close. As a linchpin in the booming artificial intelligence market, Nvidia's performance is closely scrutinized by the market. The company, the world's leading producer of discrete GPUs, is central to the training of large language models and algorithms used by major AI companies, further solidified by its proprietary software and services that lock in clients. Nvidia's stock has surged over 60% in the last year, nearing record highs. While the company has consistently surpassed analysts' top and bottom line estimates over the past year, investors have noted a recurring pattern. The stock has declined in 3 of the last 4 quarters following earnings releases, indicative of profit-taking. However, investors who exited Nvidia following previous reports may feel they missed out on significant gains. Looking ahead, analysts project robust growth for fiscal 2027, forecasting revenue to increase by 73% and earnings per share, EPS, by 67%. With the stock currently trading at 27 times this year's earnings, analysts suggest it remains undervalued. For long-term holders anticipating sustained AI capital expenditure from hyperscalers, the timing of the purchase, before or after the next earnings report, may become less consequential. Global artificial intelligence chip leader Nvidia is establishing its first research center in Singapore, marking its second presence in the Asia-Pacific region. This move aligns with Singapore's aggressive push to position itself as a regional hub for real-world AI development, testing, and deployment. The new Nvidia lab will concentrate on advancing embodied AI and enhancing the efficiency of AI infrastructure. The center will collaborate with university researchers, industry partners, and government agencies, signaling a strategic focus on the practical application of artificial intelligence. Singapore is heavily emphasizing embodied AI, a field encompassing robotics, autonomous vehicles, and drones, as a critical next frontier for AI breakthroughs across sectors like manufacturing and services. In tandem with Nvidia's entry, Singapore announced plans to launch a testbed later this year to facilitate the co-design, deployment, testing, and validation of commercially viable AI robotic technologies. Major industry players, including Surtees, DHL, Grab, and QuickBot, are anticipated to be early adopters of this testbed. Furthermore, the Singapore government will partner with AI robotics companies such as Slamtech, Unitree, and QuickBot through a new Center for Intelligent Robotics. Initial trials will explore practical use cases, including employing AI robotics for food and parcel delivery, as well as cleaning and security patrolling to augment existing human operations. These significant announcements were made on the opening day of Singapore's ATX Summit, a technology conference centered heavily on AI deployment this year. Major U.S. indices experienced a downturn on Tuesday, with the Dow Jones Industrial Average slipping 0.65% to 49,363.88, the S&P 500 declining 0.67% to 7,353.61, and the Nasdaq falling 0.84% to 25,870.71. Retail traders and investors focused their attention on several key stocks throughout the trading session. Meiwu Technology shares surged dramatically by 97.1%, closing at $4.75, following the company's announcement of a new private financing deal totaling approximately $15.65 million to expand its artificial intelligence capabilities, specifically targeting the development of an AI-powered skincare management platform. Kava Group's stock saw a slight dip of 2.22%, settling at $78.12, though it managed a recovery, rising 7.33% to $83.85 in extended trading. Kava reported strong first-quarter results, with revenue reaching $438.27 million and adjusted earnings of 20 cents per share, both surpassing analyst expectations, driven by 32.2% year-over-year revenue growth. Chewy's stock declined by 9.11%, closing at $19.66, hitting a new 52-week low of $19.46. This pullback followed cautious adjustments from Wall Street, despite analysts noting ongoing operational improvements. Keysight Technologies posted a modest gain of 1.07%, closing at $344.11. The company reported robust second-quarter earnings of $2.87 per share and $1.72 billion in revenue, both exceeding estimates. Keysight also raised its fiscal 2026 outlook, forecasting strong performance, citing sustained demand trends. Nvidia, however, saw a slight decrease of 0.77%, closing at $220.61. Investors remain keenly focused on Nvidia ahead of its upcoming earnings report, with analysts anticipating first-quarter revenue of $79.08 billion. Beyond individual stock performance, broader market developments include commentary suggesting Nvidia and Micron are poised to benefit from an AI supercycle, driven by expectations that artificial intelligence will fuel massive, long-term demand for computing infrastructure. Furthermore, the SEC is reportedly preparing a framework to allow trading of tokenized versions of Wall Street-listed stocks, with an innovation exemption being drafted. Former President Donald Trump has disclosed thousands of stock trades in the first quarter of this year, many of which involved companies directly affected by his policy decisions. A recent report filed with a federal ethics agency revealed over 3,600 buy and sell orders, totaling possibly more than $100 million in transactions over 3 months, with an average of 50 trades per day during market hours. The disclosed trades include significant investments in Nvidia, with as much as $6 million in the stock, stemming from approvals for its advanced chips to be sold to China last year. The portfolio also featured stocks in several U.S. military suppliers impacted by the Iran war, such as Lockheed Martin, General Dynamics, and Northrop Grumman. Ethics officials have raised concerns, stating that the knowledge of such a portfolio could influence presidential decisions across various sectors, including health policy, government contracting, and foreign relations. Critics have labeled the activity a fundamental breach of trust, noting that federal employees are generally barred from holding assets impacted by their policy work. Despite the scrutiny, a spokesperson for the Trump family business asserted that the president's portfolio is managed by third parties with sole and exclusive authority, stating that neither the president nor his organization is involved in selecting, directing, or approving specific investments, and they receive no advance notice of trading activity. The disclosed portfolio also includes shares in Apple, Boeing, and Tesla, with CEOs of these companies accompanying Trump on recent trips to China. Additionally, the holdings encompass Intel, the chip maker in which the government took a 10% stake last year, and stocks in fast food chains like Shake Shack, Papa John's, and Cheesecake Factory. This activity contrasts with the practices of previous administrations, which typically involved dumping stocks before taking office or utilizing broadly diversified funds or blind trusts to avoid conflicts of interest.